a real estate and finance expert that goes to bat for you every day as a consumer advocate. Your host and the consumer quarterback, Brandon Rhymes.
And welcome to the Consumer Quarterback Show, where our goal is to educate, entertain, enlighten in a way that makes you more informed as a consumer, making you more street smart here on the Consumer Quarterback Show. Brandon Faust coming up on the show. Fred Muth as well, Tampa Screens and Aluminum. And we're going to be kicking off with our mortgage expert contributor, Tom Rydberg. Some interesting stats. 9% of U.S. home sales are flips. That's an interesting stat as well. And did you know, here we're going to talk about which presidents have descendants that had slavery in their, the slave owners in their family. So presidents who had owned slaves back in the day. It's interesting. There's a complete breakdown we're going to have of that. So president's relationship to slavery. Interesting content coming up here on the Consumer Quarterback Show. We always like to feature our real estate listings. It's part of our strategy to help sellers maximize the exposure and the profit on the sale of their real estate properties. And we got a hot new listing on Clearwater Beach. This one's 861 Mandalay Avenue. $1 million listing on the beach. Beautiful property, completely renovated, updated. 2 bedrooms, 2 bath. You got an open kitchen layout with quartz countertops, gorgeous stainless steel appliances. This has a 900 square foot screened in covered patio, and you're literally steps from the sugar sand beaches and dolphin-filled waters of north side of Clearwater Beach. People like that north side much better. You got a newer roof as well. 861 Mandalay Avenue in Clearwater Beach. Gorgeous home. Great opportunity to purchase real estate here in Tampa Bay. Now, we also have $13 million land development opportunity in Orlando. This is Pebble Creek. The one that we have in Pebble Creek is it's an opportunity for a builder-developer. You got 100 acres here, $13 million. 46 of those acres just about are buildable. So you got buildable land close to Orlando, about 10 minutes from Disney. Great opportunity here. Four Corners, Florida. Prime development, close to some major attractions. You can see all of our real estate listings online, platinumcoastalelite.com.
Yeah, I'm racing my class to those saving our ass overseas.
And a quick shout out to the Bilmar Beach Resort, the official hotel partner of the Consumer Quarterback Show. Treasure Island, Florida. Whether you're planning a local staycation or maybe you're out of state listening to this program on one of our syndications on Apple TV, Amazon, Roku, of course, multiple stations catching us on iHeartRadio app as well. BilmarBeachResort.com. Check them out online. Let them know the real estate quarterback sent you. All right, Tom Rydberg, welcome back, sir.
Hey, good to see you.
Yeah, man, good to have you. And there's a lot of stuff always going on in the real estate business, mortgage.
Yeah, for sure.
Kind of lumping that into the insurance and title business.
That stat, that 9% flips, that is hard to believe.
Yeah.
I know that there's a lot of activity in different markets, but I never would have expected 9%. I don't know how that relates to historically, if that's kind of a historic norm. I feel like whenever real estate is in a good trend, everybody watches HGTV and says, oh, I'm going to try to flip a house. And I think then when the market goes south, people kind of get out of that and they leave that to the professionals. So I don't know. I think sometimes flipping gets a bad connotation to it.
Yep.
And certainly there are those examples. But, I mean, if, as far as values, and I think it's good for neighborhoods and communities, right? So you get a distressed property that probably just hasn't been taken care of. Somebody comes in, they make a few bucks, but they better the neighborhood. So
yeah, it improves the neighborhood. You're improving the values, so the neighbors are going to like that. It's at some point they may want to refinance, pull out some cash, maybe pay off some credit card debt, do a consolidation loan. So the neighbors like that, and then of course when they go to sell, there's going to help their resale value. The ones we don't like are these big institutional buyers like BlackRock, and
right.
I know the audience has heard me go off on that several times, so I'll save that.
What's your experience? Are they more buy and hold though, right? Or are they coming in and do they typically buy distressed properties, rehab them, and then just
Renovate and rent. I see a lot
see
of
that,
hedge
okay.
funds. Yeah, they'll renovate and rent them, keep them, and then who knows? Maybe when the market starts to contract, like you were just describing, that's maybe when they sell a big. But the difference is when they're selling a portfolio of homes, either through multiple states, Southeast United States, or they'll pick a certain top 10 cities that they're buying in. I've dealt with these people before, and what they'll do is they'll call up the agent and hey, here's my buying box. They'll call it. First they'll go in and buy 3 bedrooms, 2 bath, 2,000 square feet. It's got to be concrete block. And then, after a while, after those mostly run out, then they'll say, okay, fine, we'll do a 2 bedroom, 2 bath, concrete block, etc. So they kind of loosen those guidelines over the years.
Right. Interesting. And then when they go to sell, obviously you have this influx of supply, which has the opposite effect.
Right.
Maybe on values. Yeah,
and I bet you that's part of their decision making too. Is they're going to say, look, these are really well performing assets, great rental market over here. Over here, we'd like to try to get rid of some of these just because of who knows. Maybe also I think too when you look at the legislative side or more of the municipalities cracking down on some of the short term rentals, I think that plays into it as well.
I get some people that do kind of like an in between, and I like this. They'll buy a new house every 3 years. They're a contractor, right?
Yep.
They have all their buddies or laborers or
Subs.
have it in a trade.
Yep.
They'll buy something. They'll live there. They'll do it little by little. They'll do the minimum. I think it's 2 out of the last 5 years to avoid capital gains taxes, and then they'll sell it for a good profit. Then they'll move into the next one. That's hard to do. Like if you have a family and kids in school,
Yep.
that to kind of up and leave every 2 years. But if you have that flexibility, that's not a bad way. And then you kind of do things at your own pace. And I've had families that even individuals, they're not super handy. They'll just do the work themselves, and you save a ton of money.
Yeah, exactly. That's what my Uncle Bobby did. And several family members, they would do that. They'd had, build nice homes, beautiful, set it up really nicely with an extra large laundry room. And then, you're walking over here, like having all those little nice pluses.
Yeah.
And then exactly that. You're exactly right there, Tom. They'll sell it after the 2 years. That way you can still take advantage and not get hit by the taxes so toughly. But if you just joined us, we're talking to Tom Rydberg here, Draper and Kramer Mortgage Corporation, DK Mortgage, on the Consumer Quarterback Show. I'm your host, Brandon Rhymes. Anything locally, dealing with real estate, mortgage, we'd love to talk to you. Reach out to the hotline, 727-263-3707. Even if you want to call and say hi and thank you, we greatly appreciate it. I have some great conversations with our audience, and it's great. We'll talk a little real estate. We'll get into little sports here and there, but I really appreciate the comments too, where I'll have people say, "Hey, thanks for all you're doing. We appreciate you shedding light on some of this woke ideology and other radical ideas that are out there. Thank you for doing that." And so that really means the world to us. Appreciate you doing that. ConsumerQB.com as well. So Tom, I got a couple of things I wanted to get to here. I think another trend that we're going to see going forward is the movement from, and we've already seen it, but we're going to see it more and more, from cities, moving out of cities to more rural areas, maybe even closer to farms, with all the attack on the supply chains and food processing centers. Here's an article I pulled down off of LinkedIn. Millions under extreme weather alerts. New York City was hit by a potentially less severe smog earlier Thursday from Canadian wildfires than it was about 3 weeks ago, when the city's skies turned dark orange haze. The city's air quality index was at moderate 83. However, Chicago, Pittsburgh were experiencing very unhealthy air quality. According to Air Now Index, some 80 million residents are under air quality alerts. Also, you have heat. And so kind of goes on and talk about that. But I think there's a lot of people, man. They're getting out of these cities. Crime. You got freaking vending machines in New York City giving out crack pipes. You can literally buy crack pipes from vending machines in New York City.
Yeah. We've definitely gone off the edge in a lot of areas. So I think getting some space and getting away from maybe elevated crime levels and a lot of other things. Interesting you bring that up, because I know HUD and Housing and Urban Development, they're trying to kind of accommodate and create more affordable housing opportunities. So I saw that they recently started an initiative. So you have a special division within HUD that is concentrating specifically on manufactured housing program. So I don't have a lot of those details, but we've talked about that before. having a home built on site the traditional way is great, but it's not the only way to build a home.
Yeah.
And there's a lot of other very affordable options that can be, constructed to withstand, hurricanes and everything else.
Yeah.
So it'll be interesting. And with those programs are going to become more affordable financing options too.
Yeah.
So I think if you get some momentum, because sometimes people want the idea of a manufactured home, double wide, whatever, and the lack of lending options or the additional cost of those lending options or insurance kind of deters them from doing it. So
yeah, exactly. And I just did a deal on one of these. I think it's closing next week or something. But $309,000 for a nice double wide manufactured home, newer model. 100% financing. It qualified for the USDA.
Yeah, great
so
program.
you've got that. And I think they got an acre of land with it. Yeah, you're a little bit north. I think you're in Wesley Chapel somewhere there, Zephyr Hills. But yeah, that's a way to build wealth. Think
For
about
sure.
it. You're coming out of pocket with very little money, and if you can negotiate seller concessions, this is another very good strategy to keep more of your hard-earned money in your pocket. Save it for that rainy day fund. You want to explain how seller concessions work?
Sure. So it's tough. A couple of years ago, or even last year, very hard to get any type of concession, especially even financing. But now that the market is kind of leveled off, it's more of a equal balanced market. It's not unusual to ask the seller to pay some of those closing costs. And when closing costs, we talk about really lumping in homeowners insurance premiums, setup of an escrow account, even sometimes your home inspection, so that you're reducing dramatically how much cash you need to get into a property. So that's, again, working with the realtor who has knowledge. A lot of times, Keller Williams, what I like working with them is they have a wide branch. Even if it's not anybody in your office, certainly the listing side is going to know of Keller Williams and probably you. And that gives you a little bit more flexibility with structuring a deal, because it's not always about the price. Sometimes it's, you pay a little bit more, but you're reducing your out-of-pocket expenses. And that even sometimes I have clients that have the money. They have, 15% to put down, but they also have, $20,000 worth of credit card debt that's over 20%. And we can suggest a strategy where, hey, let's put less money down, ask the seller to pay those closing costs, and then that money you've saved, you can put to pay off your credit cards. Now, if you just put that on a piece of paper and you just, email it over with no explanation, that doesn't necessarily look like the strongest offer. But a phone call from you, a phone call from the lender explaining the strategy and why you're doing it that way can make them feel more comfortable and say, listen, if there is an issue with an appraisal, which sometimes there is, we have the additional cash, we can make up the difference. So thinking a little bit outside of the box. And I get frustrated sometimes because I think, realtors obviously, they want to sell a house. They want to sell the right house. But they get so afraid to make a request like that because they're afraid that they're going to turn off the seller and they're going to go with another offer without a second chance. So that strategy we just talked about maybe isn't what you want to do on your dream place. If it's brand new to the market and a very busy subdivision, that's probably not the strategy to take. But if something's been on the market for 30 or 60 days, there's probably a stronger likelihood they're going to look at that.
Yeah, exactly. You build it right into the price. You still can get the seller the same net.
Win-win.
You're going to build it into the price. $100,000, example. Okay, fine. We'll offer $103,000. We'll give you the 3% seller concessions.
Yeah.
You make it win. Tom Rydberg, DK Mortgage here on the Consumer Quarterback Show. I'm your host, Brandon Rhymes. We're going to take a quick break, but I'm going to talk about this story that was so interesting to me when I saw it getting posted on Twitter. Which living presidents are descendants of slaves? We're going to let you know on the other side of this break, and which ones are not. Which one is not? It'll be interesting to see. Yes, which living presidents are descendants of slaves, and which ones are not descendants of slave ownership. Thank you for the correction there, Alex. All right, coming back. Consumer Quarterback Show, consumerqb.com.
Mortgage loans are subject to approval based on program guidelines, borrower's credit, and underwriting approval. Tom Rydberg, NMLS ID number 221474 and Florida number LO20395 is an agent of Draper and Kramer Mortgage Corporation, NMLS ID number 2551 and Florida MLD 494, an equal housing opportunity lender.
You're listening to the consumer quarterback, Brandon Rhymes, cutting through your typical media nonsense and offering you a rational and unbiased perspective on current events and life in Tampa Bay. Online at consumerqb.com.
All right, welcome back. Thanks for hanging out with us here on the Consumer QB Show. Appreciate you. Tom Rydberg's in the house. We're going to talk mortgage and real estate coming up with him in just a moment. Before we do, we always like to feature our listings, helping our sellers sell faster for more money. If you're thinking about selling, you're leaving money on the table. If you're listing with a competitor, an average realtor that's going to put it on MLS, do all the basic and traditional marketing, that's not working today. You got to go above and beyond. You got to add more value. That's what we do at the Platinum MVP team, Keller Williams Realty. 3704 Burger Road. We just did a $93,000 price reduction. This owner is motivated, and we got a mansion for sale here in Lutz, Florida. Burger Road, 10,000 square feet, 10 bedrooms, 12 bath, no HOA. Beautiful home right here in Tampa Bay. Large lot. You got an indoor pool with a full bar, oversized deck, full tennis court, movie theater, library, saunas, 2 master suites, grand balcony, and more. 3704 Burger Road in Lutz, Florida, one of our hot listings, $93,000 price improvement yesterday. 7202 US Highway 301 South, Riverview, Florida. Commercial property. Now, reminder, we can list your vacant land, we can list your commercial properties, and your residential real estate properties. And you're going to get maximum exposure through not only all the assets that we have through Keller Williams, #1 real estate company on the planet, but also with our syndicated radio and TV show. 7202 US Highway 301 South. You got a corner lot location. You have a mechanic shop, brake shop right next door, and a separate building that can operate as a real estate office, attorney, mortgage, insurance, title company, barber shop currently. Check it out. US Highway 301 South in Riverview, 7202 US Highway 301 South. You can see all of our listings, platinumcoastalelite.com.
This is God's country.
All right, let's get to that tease there. Which living presidents are descendants of slave ownership? Their families own slaves. So this was an interesting tweet that we saw. We're going to throw this on the screen here, and it's actually done by Reuters. Reuters did this. They did an entire deep investigation into the history of every living president and elected official in the United States government, and proved that only recent president who wasn't descended from slave owners was, guess who? Donald J.
Yeah, I was going to say Obama.
Donald J. Trump. Yeah, exactly. That'd been a good guess. And then that's from D.C., Drano and Jack Posobiec on there as well. And in addition to President Joe Biden, every living former U.S. president except Trump are direct descendants of slaveholders. Jimmy Carter, George Bush, Bill Clinton, and through his white mother's side, Barack Obama. Trump's ancestors came to America after slavery was abolished. 2 of the 9 sitting U.S. Supreme Court justices, blah, blah, blah. And it goes on and on. So isn't that interesting, you know?
It is interesting. I don't know what to make from that. It's a surprising answer.
Yeah.
I don't know that I want to be judged based on my ancestors.
Exactly.
You know, so I don't know why but it's definitely an interesting fact.
It is. It's out there. It's out there. We're talking with Tom Rydberg here, Consumer Quarterback Show. Brandon Rhymes here, your host. Rents dropped also, Tom. You had mentioned to me that the rents...
Yeah, first time since COVID. So that's, I guess helps when, housing is a big component of inflation. So hopefully rents coming down will lower overall inflation and get us back on track, because the other data is just sticky. It's not coming down the way we had liked. I woke up this morning to, I don't remember if it was first time unemployment claims or continuing claims came in much lower than expected. And the bond market did not like it. So that was like a big punch in the face as I was drinking my coffee this morning. So hopefully, none of these data points move in a straight line. So hopefully this is just a big bump for the moment, and we'll get some good news next week and finally get heading in the right direction. So
yeah, I think if the mortgage rates would stay stable, maybe drop a little bit, you would see a good amount of activity.
Yes,
there's just so many people that are saying, hey, look, these where their rates are right now, I'm just not going to move closer to grandma's house or move closer to the beach.
Well, and it's interesting now. These rates have been elevated for close to a year.
Yeah,
but what's funny is the rates a year ago that everyone was complaining about look pretty good now.
Yeah, exactly.
I mean, they're probably 2 points lower.
Yeah.
So I guess the lesson there is you never know what's around the corner in another 6 or 12 months. So if it fits, if the payment works for you, if it's still better than renting. Maybe even at these elevated rates, it's not a bad time to buy. So depending on your situation again.
Yeah, and there's a credit contraction. A lot of people are warning about this credit contraction, man, especially with the numbers coming in on the commercial real estate side, 13% vacancy, and 40% of these large U.S. banks are holding paper, or the paper that they hold is 40% commercial paper. What's your thoughts on that on a macro?
Well, that's going to lead me into another topic. But so I think, yes, that's going to be interesting to see how that plays out. And I think that there's whispers of a much bigger issue that's going to come out in, probably 9 to 12 months. We don't do commercial, so I'm not as privy to how some of those get structured, but we're talking about significant increases to business owners and property owners. And some of them, it's not even that it's going to be an increased fee. They just may not be able to get financing on it. So right. I don't know what happens to that if it falls into a category of like a distressed commercial real estate.
Right.
So, yeah, I think I'm a little nervous how that's going to play out. Back to the residential side, though, the servicing. So commercially, when someone gets financing, that's a longer term endeavor. Usually those are 5-year terms that they do. On the residential side, it's a more fluid process. People will refinance when rates drop. If they need some cash, they can close. So the servicing of those loans, there's a value to that.
Yeah.
And what's happening now with the rates going up is there's less perceived value for a loan now to service because the expectation is it's not going to be held that long. Someone's going to take out the money now and then refinance a year from now, which means that servicer, believe it or not, is going to lose money. Because they don't really make a profit until they've serviced a loan for maybe 3 or 4 years.
Yeah.
So with that now, it's going to be more costly to get a mortgage. Not only are the rates higher, but don't be surprised if you're paying some additional fees, even with a straight A borrower with good credit. So I'm finding a lot of clients are getting surprised when they see that rate online, when they get the details. The rate sounded good, but there's a lot of additional cost.
Closefaster@gmail.
You got it. Yep. Happy to review anyone's quotes if they want a second opinion.
Closefaster@gmail. Tom Rydberg, DK Mortgage. Taking a quick break. Coming back, Fred Muth, Tampa Screens and Aluminum, as well as Brandon Faust, Mold Solutions, here on the Consumer Quarterback Show, consumerqb.com.
Thanks for listening to My Daddy's Show. Please make sure to send him all of your real estate deals and subscribe to the Consumer Quarterback Show.